we've seen the cascading effect in detail through our example. Cascading effect is tax paid on tax, which is a fallout of the current tax structure which imposes some major restrictions on claiming input tax credit. You think you pay too much of tax? Don't worry, GST comes to the rescue. In fact, reducing the cascading effect of tax would be one of the major achievements of the GST regime. Let's check out how the cascading effect would reduce under GST. Let's bring back our example on cascading effect. We've already seen that we pay tax on each of the three stages: manufacturing, warehousing and retail, that's final consumption, and the total tax comes up to 67 because of cascading effect. Let's see how this would change. This exact example would change under the GST regime. We'll have to add one more column to our example. This column is for the actual liability. It represents the actual tax that each of these individuals will have to finally remit to the government of India. You'll understand what actual liability is in detail as we proceed through the example. So let's just start with our first step, where our manufacturer is buying raw material. We know that the cost of his raw material is 100, on which he pays 10 rupees as tax at 10%. His actual liability would be 10 and the total cost would be 100 plus 10, 110. Moving to the manufacturing stage, we know that the cost of manufacturing is 150. Similar to our previous example, 100 raw material plus 40 value added and 10 of tax on the raw material. That's how you get 150, 100 plus 40 plus 10. Now, because this is the next stage of handshake in the supply chain process, the government will collect tax here as well. At 10% on the cost of 150, the government will collect 15 rupees as tax. But under GST, input tax credit would be allowed. And so, the manufacturer had already paid 10 rupees on procurement of raw material. His output tax liability, that is, his liability on sales, is 15, and he can claim credit of the 10 he's paid on purchases, and his net liability to government, the amount that he has to finally remit to the government, is only 5. 15 output tax liability minus 10 input tax credit, 5. The total cost would be 150 plus 5 of tax, 155. Note that we've assumed that there are no profits involved in our example, just to make it simple. The cost after the wholesale value add is complete is going to be 185. How? 155 plus 30 value add. Take a note that this 185 includes tax of 15, 5 from the manufacturing stage and 10 from the raw material stage. We would proceed just as we did for the manufacturing stage. 185 for the wholesaler would attract a tax at 10% of 18.5. Now, since this 185 already includes a tax of 15, he can claim input tax credit of that amount. That's why his output tax liability, actual tax payable to the government, would be 18.5 minus 15, 3.5. The total cost at this stage of our shirt is 188.5. So the cost after retail process is over is 208.5, 188.5 plus 20. At this stage, 208.5 includes tax of 18.5, 10 from raw material, 5 from manufacturing and 3.5 from wholesaler. Same process as we did for manufacturing and wholesaler. 208.5 would attract a tax of 20.85, but because 208.5 already includes tax of 18.5, the retailer can claim input credit of 18.5 and his net liability payable to the government would be 20.85 minus 18.5, that's 2.35. The total cost of the shirt is 210.85. 190 is the total cost without any tax included, that's 100 of raw material, 40, 30 and 20 value added, 190. And to that we add a tax of just 20.85 to get 210.85 as the total cost. Compare this to our earlier example where no input tax credit could be claimed. The cost was 257.95, almost 258, and now it's just 211. So that's a flat saving of 47 on one shirt. That's just one shirt in our hypothetical example, but the mechanism works overall. So apply this logic to every product or service that is sold in our entire country. Can you imagine the kind of savings that GST would bring about? And that is the magic of the goods and service tax. This is how GST would reduce the impact of cascading effect on taxation and reduce cost of goods and services across the nation.